All right, mic check, mic check. Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it. We provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. And like Prince said, you know, it's been a money making June. We only 8 days in. All right. So last week we talked about finding stocks that beat the market, right? Today, we're going to talk about finding a deeper understanding of the stocks that you're interested in, right? So earlier, we continued that process of you know, finding stocks that are likely to outperform the market. Earlier today, we went over a group of stocks, and um, they're, they're all they were all rated strong buys by the market, and some of them were even rated strong buy in our even more strict system. Tonight, I'm going to pick 3 of these names, and we're going to go over some of the tools, tactics, and applications that you're going to need in order to make this whole thing work here. Now, at the top of the room, you'll see I have a link I just put up there. If you're on Clubhouse, if you click on that link, you'll see it says "Watch us on Twitch." That's the first thing you're going to see there. Feel free to slide on through. Now, I'm gonna be presenting you guys with several options. I'm going to be presenting you with several options for how to dig into um, these specific stocks that you're interested in. All right. Okay. So the first thing that we're gonna do here, I'm gonna put up a document here, so that way I can type out some prompts. You can see them on the screen. All right. Now, if you have not already, some of you guys have been here long enough. You've already done this. you want to download the Quarter app. Let me just bump this. All right, QUARTR. QUARTR. This app right here. You want to download this. Okay? Download the Quarter app. This is going to be your best friend when it comes down to that initial onset of research. Because once you know what companies you want to invest in, right? Or let me rephrase that. Once you have an idea of what companies you want to invest in, you can't just go and throw your money at it. Okay. The first thing you want to do is learn as much as you can about the company, right? I want you to think of this as a, like a process that kind of just builds on top of itself, with each step giving you more and more and more of what you need to know about a company. Now, I'm gonna split this thing. I'm gonna split this page up that I have here into two parts. Okay, so part one is gonna be the prompts. I'm just gonna be typing the prompts here so you can see them, and I'm gonna be typing them in a large enough style that you can see them, and then the second part here is gonna be what we now know. Okay, so for the prompts, like I said, I'm gonna type up some prompts here that you're gonna utilize. Now, when you go to the Quarter app, okay, let me show you some things here. All right, let me pull this up real quick. Give me 1 second. Un momento, por favor. Okay. So I'm gonna show you a few screenshots here. All right. Again, that is QUARTR. Okay. That is QUARTR. So quarter, the actual word quarter, but without the X. I mean, I'm sorry, without the E. I'm talking about some X. All right. I'm taking a few screenshots of the app here that we can utilize here. And then I'm going to show you what this looks like here. All right. So here's what it looks like on the inside of the app. Let me send this over to you guys right now. Give me 2 seconds here. Okay. I'm gonna just take you guys over to the charts like I usually do, and I'm just gonna drop a few images over here. Phone back. Whose phone? Oh crap! I've been on mute this whole time. Yeah. How long? I didn't see any movement on the thing. So I was like, phone died. You don't see any movement on where? On Twitch. Oh no, I was saying I'm grabbing the Quarter app snapshots. You guys didn't hear what I said about the Quarter app? Yeah, it went off when you said and the prompt you're gonna use. Okay. No, that's fine. That's fine. Yeah, I was just grabbing the what you call it. Okay, I thought I was mute the whole time. I was about to say what? All right. Much. No. Once I said I think the last thing you should have heard was me say I'm grabbing the screenshots for you. You didn't hear that part? No. Yes. I heard it. You was on the stream though, huh? Yeah. Well, but I'm muted on the stream. Oh, so you heard it over here? Yeah. Yeah. Yeah, because I think I hit the mute button when I did that for some reason. I don't know why. So when you go into the app, right? So these are the two things you're gonna notice here. All right. These are the two things you're gonna notice when you go into the app. All right. See these two screenshots right here? So you're gonna click that button that you see down there that I have circled here. You hit this button right here, and this is gonna pop up for you. When this pops up, you can actually type in at the actual at button, like how you would at somebody on social media, and you can type a ticker symbol there, right? So what you're gonna do, hold on one second, let me get back to my. All right, here we go. So what we're gonna do here, and I think my hand hit that mute button on accident there. So let's type in the first ticker symbol that we saw today that was ranked number one. Was ABNB. All right. So boom. So I'm gonna type in at ABNB. All right. And we're gonna say, give me a summary of the latest earnings call. Feature a breakdown of the latest. I'm sorry, of the Q&A segment that discusses the Q&A segment that discusses the key concerns of analysts on the call. Be sure to include which financial institution asked the question. Also, include any changes. No, let's rephrase it. Also include any. Right. So also include any changes in the management's tone from the previous earnings call. All right. So let's go ahead and punch this in here. Now, for me, I'm just going to copy this and drop it in on my phone. All right. I'll be sure not to mute this time. Okay. Now, this is going to be a few things from the Quarter app. We're also going to be utilizing Gemini, and we're going to talk about how you handle that as well, right? But let's let the Quarter app run, and while that runs, okay, let's go over here to stock analysis. All right. And let's also pull up Gemini at the same time. So the Quarter app is running now. So now what I like to do is I'll punch that in on the Quarter app over there, and then I'll come on over to Gemini and I'll start getting some things ready over here. All right. So what I want to do, all right, again, we're doing Airbnb. Let's learn as much as we can here about Airbnb, right? And the Quarter app is starting to print out some information for me there. All right, let's go Airbnb. Let's go to the profile tab. And we're going to see filings, right? You click on filings. And let's once okay, we got it over here. They moved it around a little bit here. All right, so this is the latest quarterly report here. So we're gonna download this one. All right, we're gonna download that. We're also going to download the annual report for 2025. And we're gonna download. We like to have at least 3 reports we like to grab at least 3 reports. I'm gonna grab the annual report for 2024. All right, there we go. Annual report 2024 right there. Let's download that. Now what I'm gonna do here is I'm gonna upload this into Gemini. All right, give me a second. Let me upload these. All right. Hold on a second. All right. There we go. Now, so for Gemini, you'll be able to see me type my prompt in here. Let me zoom in for you. All right. All right. So for Gemini, what I want Gemini to do for me, right, is I want Gemini to actually um, do something very similar to what I just did with Quarter, but it's going with information that I'm giving it. The most important thing when you're trying to analyze these earnings reports is that you actually give the AI the information you want it to analyze. Do not depend on AI to bring you all the right information. So that step that I just showed you guys as far as going over here to download the earnings reports, those quarterly and annual reports is vital. That is a vital part of this process. All right. So we're gonna put Gemini in a certain mode here, right? We're gonna say take on the role of a stock analyst from a major institution. Your job is to deliver report on what is ongoing happening with Airbnb. What has the shareholder experience been like over the past 2 years? Um, how has the company risk profile and financial standing shifted over the over this time period? And what are some red flags, opportunities, or threats that are observable in the reports? Okay. So again, as I said here, so we're going to have it take on the role of a stock analyst from a major institution. His job is to deliver a report on what is currently happening with Airbnb. What has the shareholder experience been like over the past few years? Right? How has the company? How is the company's risk profile? Right? And financial standing shifted over this time period? And what are some red flags, opportunities, or threats that are observable in the reports? Okay. So let's go ahead and let that run. In the meantime, let's go back over here to our doc and let's see what has let's go back over to our doc here and let's see what has what's actually come about with this what do you call it? From the quarter app, we already have some information here, okay? So the overview here from the quarter app. What we have here, right, is thank you, Barry. So it says here that Airbnb's Q1 earnings call, which was on May 7, 2026, reflected continued business acceleration. Right? So we're just gonna start marking some bullet points, okay? Um business is accelerating. All right. Give me 1 second actually. Let me go ahead and create a bullet list here. No. Let's try this again. All right, there we go. The business is accelerating according to these latest. So it's exceeding the high end of guidance. All right. All right. Essentially, meaning business is better than usual, so better than expected. Okay. Um. Let's see here. App nights are growing by 22%. First time Booker growth hitting 10%, the highest since 2022. On the balance sheet, Airbnb generated $1.7 billion in free cash flow and $4.5 billion over the trailing 12 months. They repurchased, so stock buybacks are in play. All right. Uh, and they raised full year guidance. Okay. Um, so key analyst concerns. So the app growth and AI driven restructuring. So this is from Citigroup. They asked what specific app changes drove the 2022 growth in nights booking and how Airbnb is rethinking team structures in an AI world. Chesky attributed the app growth to more aggressive prompting for mobile web visitors to download the app, increased notification opt-ins, and rising app store rankings. So, um, hmm. So the ranks are rising in the app store. That was the piece there that actually caught my attention the most. Now from Oppenheimer, we had Jed Kelly, who asked for an update on room night trends in hotel test markets. Management noted that hotels, while still a single-digit percentage of total nights, are growing at more than double the rate of the overall platform. Let me just ask this question because this is something that I don't know about Airbnb. So maybe somebody in the room has this information here. Airbnb, how long have they been doing the hotel thing? So they're doing the hotel thing now? So I didn't know they were doing that now. Is anybody else hearing this for the first time?
It's just it's an option where you can filter, right? And then it'll show you all the hotels in that area that you're looking for. And it seems to be pushing, like it'll push that notification to you as well. Like as you're trying to research an area
Yeah.
and you have the map up and you're looking, and then it will say, okay, do you want to look at some hotels? And so it's pushing it that way.
So they're getting paid to promote hotels. Pretty much it's a hotel promotion app now. On top of what they already do. Does anybody else think that's a conflict? Like, how does that make them more money? Unless their Airbnbs are booked out one like you know what? Actually, no. Now that I think about it, well, I mean, because it's on us to run the Airbnbs, right? They're just the source of the. So you know what? I actually like it. I like it. Okay. Now that I think about it, right? Because it's really their job to facilitate your stay at somebody else's home, right? So it's not like they're the ones that own the. I mean, they do own. They are trying to get to that point where they own some of the a lot of the homes as well. But for the most part, you know, um, the largest part of their business is other people listing their homes for Airbnb rental.
Yeah, that's what I view it as like eBay. You have all these various sellers, or like Amazon has too, these different sellers.
Mm-hmm.
So same with them, they just have the platform, the marketplace for these rentals, and now, like you said, they do hotels as well.
So I'm going to say hotel promotion is a plus in my book. Would you agree with that?
I think when I think of Airbnb, I'm going for the lowest cost, and so I mean quality though. So
Yeah.
I don't know. I would be I would be looking at like for rental homes
Well,
for
no.
a hotel, but I think it's definitely a good thing because it's a marketplace and they're able to promote that.
Right. Yeah, that's kind of what I'm getting at, right? So at the end of the day, they're gonna get paid from the other people on the app anyway, right?
Absolutely. I wonder how much do they get paid though when you book with the hotel.
That's something we can look into. So you see what she just did there? That's a question there. She goes and she digs and she finds that answer. And so we say, well, what we now know, right? So maybe she can go, if you want to go dig into that a little bit, Anisha, you let us know, right? What do they get paid? And we could also go over here and see if they have any revenue segments. See, it says metrics here, right? So gross booking value, $96 billion. Nights and experiences booked, $546 million. Sales and marketing, boom, boom. No, these are expenses here. Um, Operating expense breakdown. Huh. Hold on, wait a minute. Revenue 12 billion. So the cost of revenue is, pretty light. Um, Free cash flow margin is 36%. So that's actually really good. The operating margin 82.9%. All right, let's keep cooking here. Let's keep cooking. All right. Delta partnership. So they have a partnership with Delta as well. Let's mark that down. Where's Moji at? There goes Delta. All right. Cost and loyalty strategies. So Clark asked whether the new Delta Airlines partnership carries a cost that would dampen take rate expansion. whether more similar partnerships are planned, and whether the airline deal constrains Airbnb's own loyalty or air ticketing ambitions. Seems like there was no definitive answer on that because it's not telling me the answer that they gave there. Hotel UX and AI search learnings. Kurowski asked whether, and he's from Wells Fargo, Airbnb's hotel experience would look like a commingled search, a la Booking, or separate tabs, and what early learn. Okay, so this is new then. Okay, there we go. So this is fairly new because I'm like, I didn't hear about this part the last time I researched Airbnb. That have emerged from the AI search pilot. Chesky explained personalization as the key. The intent is to show users what they actually want, whether homes, hotels, or a mix. And noted that carousels are being tested as a UI option. Not really seeing anything here that I really want to note. Although it sounds like it really sounds a lot like book an Airbnb for the family, send the in-laws to a hotel. That's what it sounds like. I'm joking. I'm joking. Um, so alternative accommodation supply growth. So Sheridan probed the opportunities and challenges of growing the alternative accommodation supply base and whether AI could help discover or source less easily findable inventory. And not getting an answer on that one. Then there's the fee for cup bookings. I'm not really concerned about that one. Reserve now, pay later. Okay. Um, from Jeffries, they asked how consumer adoption and cancellation dynamics have evolved as reserve now, pay later was expanded globally. Mertz confirmed that every market where reserve now, pay later has launched has seen a material lift to gross bookings, and that while cancellations are elevated, net impact is positive across all regions. The U.S. remains the highest adoption market, but others are not far behind. Talk to me, y'all. How do y'all feel about reserve now, pay later, and the fact that their cancellations are now elevated, even though it pans out to a net positive in the end? Any thoughts?
I think the reserve now is fine. I mean, they're gonna charge your card. I know when I went to Kenya, I didn't pay it all up at once, but it wasn't like a pay now later or anything like that. It was just, okay, you can reserve it, and then we're gonna take out the payments at this time, these different times, depending on how long you were staying there.
Okay. What I'm saying?
Accepting. I was just gonna pretty much see what Alicia said, but if it says, overall it's still good, like obviously it's way more people booking than it was before. And
Right.
even though the cancellations are elevated, it's still probably, it sounds from what it sounds like to me, it's still more. So I think it's a blessing.
Yeah, they're still getting more money out of it, right?
Right.
Yeah. Okay. Um. So I'm just gonna put reserve now, pay later. Off to a good start. Reserve now, pay later expansion.
Yeah, and that the payment is collected closer to your date. So like if I'm there for 2 months, they take some of it, but then and they list like when they're gonna take the rest. But it's not like you're paying all of this up front and then you haven't even stayed in the Airbnb yet. So I think it's a good thing.
Is there a cancellation fee?
I think like when you get past a certain time,
Hmm.
then yes.
Okay. Because I'm starting to really feel like a lot of these companies, that's what they're really going for. You know, they're like, screw it, let's collect some cancellation fees, or let's catch those one or two people that forgot to cancel their booking.
Yeah, but I don't think it's that unreasonable. So if if I'm staying in a place and it's like, okay, you have until this time to cancel, I think it's giving you enough. I mean, you would know, yeah, I'm not staying here anymore. And I think they let you get out of if the place is not how it was pictured and stuff like that, if you have any issues.
All right. See, it also says here that first time booker demographics and expansion market drivers. So Sebastian from Baird asked, which regions and demographic cohorts are driving first time booker acceleration? Mark highlighted Gen Z and expansion markets, especially Brazil, which now consistently ranks third to fifth globally as key sources of new guest growth. Which one of y'all headed to Brazil, man? Which one of y'all going to Brazil? Let me live vicariously through you. Y'all know I ain't going nowhere. Brazil. Hmm. Confidence and revenue guidance raised. So from JP Morgan, Amleth asked Mertz to explain the basis for the full year guidance upgrade and the at least 35% EBITDA language, and asked Chesky about further payment innovations beyond Reserve Now, Pay Later. Mertz cited stronger confidence in nights booked, average daily rating durability, and improved take rate from monetization efforts. Chesky pointed to a broad payments and pricing roadmap, payment installments, flexible cancellation policies, and localized payment methods, calling it capable of delivering hundreds of millions of dollars in revenue each year. Ah, hmm. Okay. Um, okay. Hotel rollout constraints. This is the last one here. Morgan Stanley says that hotel rollout constraints and ancillary revenue potential. Nowak asked that what the biggest constraint is on hotel expansion speed, and more broadly, whether Airbnb is considering a full travel commerce model, adding flights, car services, grocery, and agentic travel planning. Chesky described the vision in expansive terms, comparing Airbnb's potential category expansion to Amazon's shift from books to retail. Okay, let's not stretch it here, buddy. Okay, the Instacart grocery is already a third-party partnership in progress. Okay, I like that partnership with Instacart. I like that. Anything, convenience, right? You gotta love convenience on things like this. Okay, so that's everything there from for Airbnb from the Quarter app. Now let's go take a look at what Gemini brought us here. All right. So operational review and risk assessment. So again, you can copy this particular prompt here. All right. Let's bring this over here. So we have prompt 1 for quarter. All right. Then you had prompt 2 for Gemini. All right. And then, we just, everything we know, it doesn't matter where it came from. All right. So they continue to demonstrate a robust operational health characterized by consistent cash generation and a capital allocation strategy that increasingly focuses on shareholder value. The following report outlines the evolution of the firm's financial standing, current risk profile, and strategic outlook. All right? Let's keep going here. So it says here, by the way, what's up, Kenneth? 45, Doreen, April, Faith, Yolanda, Darrell, what's going on, guys? All right, capital returns. So over the past 18 months, the shareholder experience has been defined by a shift toward disciplined capital management. The company has moved beyond initial growth at all cost metrics to a model of sustained profitability and capital return. So you have cash flow strength, where they generated $4.5 billion in net cash from operating activities in 2024, $4.6 billion in 2025, highlighting an ability to convert platform activity into tangible capital. All right. And then we have a significant deployment of shareholder value was the authorization of a $6 billion share repurchase program. $6 billion? Let me go take a look at this chart real quick. Let's get rid of this real quick. Hold on. $6 billion? Airbnb, what y'all got going on? Yeah, so they were down. As you can see, we've looked at these guys in the past. Hey, Cecil, you noticing something? Low set here, higher low set here. See these lows in between here? Higher low set here. Question mark.
And there it is again.
Well, we don't know.
Right.
Well, I mean, yes. But where's it going, you know? Because,
Right.
I mean, we could still be, catching the drip. But, I mean, I'm just saying, they were still trading at a discount today. You had opportunities. If you wanted some, that was up to you. Right? Okay. So let me update that information on the share repurchasing. Stock buybacks of over 6. I'm putting Billy, man.
I thought you were going to stock analysis to German.
No, I didn't say that.
Chart. You said didn't you say you were going to check it? You said 6 million.
Yes, let me check the charts.
How's the chart going to help you with the share buyback?
I want to see has it impacted the actual trend of the stock.
I did go to stock analysis, and it's roughly 7% reduction in the share count over 3 years. So that's really good. Thank you.
Yeah, what I usually do, Cecily, is I like to see is because here's the thing, right? Sometimes all share buybacks is doing is catching a falling knife. You understand? Let's say it was buying back stock this whole time here. What good was it?
And then I learned that sometimes they'll say they're going to do a buyback, but then they also give employees shares or something like that. So it's really not a legit. I'm still researching, but I'm just like, wow, this is pretty interesting.
This is correct. So oftentimes they buy back those stocks specifically to give them for employee compensation.
It's like, yeah, I want you to retire those shares.
Right.
That's going to be beneficial for me as an investor versus you giving this to the employees, because it's basically, I would say, there's still dilution is happening.
Well, you say what's actually happening. What's actually happening is those shares get put right back into rotation anyway. Plus, that's cash that's coming out of the business. Did you get to that part in your research yet?
Not yet, but I'm still
Look that.
researching. I just making sure that like that I'm seeing it properly. That yeah, because it's like they can say this, but then they can give employee stocks, and then it's not an actual really like still can say buybacks, but then you got to really look into it.
Right. So look up what I just mentioned. You'll see that essentially um stock-based compensation is a charge to the shareholder in terms of cash. So that's the part that we don't like for the most part. All right. Let's keep reading here. Regulatory and political headwinds, you know, municipal authorities, homeowners associations, hotel industry lobbyists. They're not going to get anywhere with that. We're going to keep it moving. 134.43. I'm just saying, Faith, they trying to give us a discount. They trying, I can't buy right now. I can't buy any new stock right now until the end of the quarter, the third Friday. So next week, Friday, I can buy my heart out. Buy away, you know? But as of right now, I cannot make any purchases. All right. So operational tax complexity, the live and work anywhere policy while cultural assets introduces significant tax and payroll compliance risks. Clearly this isn't that big of a risk because at the end of the day, they're making out really well, on the bottom line, right? Bottom line would be hit if this was such a significant thing. So you got to pay attention to what you now know as you're trying to find out more. So as you're trying to find out more, don't forget what you already know. We already know that earnings and free cash flow are booming. So this area here clearly is not that much of a risk, right? As the firm integrates AI and machine learning into its platform, it faces evolving global scrutiny regarding data privacy and ethical, and so is every other person on the planet that's trying to do AI. Um, Third-party reliance, heavily relying on third-party cloud and data hosting vulnerabilities. This is that's a common threat. All right. So operational efficiency, the company is focusing on cloud-based capabilities to optimize usage patterns and realize greater efficiencies in the cost structure. This focus on core infrastructure could expand margins over the midterm. Okay. We have a threat here, one-time tax adjustment. Recent filings indicate exposure to volatility in income tax provisions, evidenced by a 537% increase in the provision for income taxes in Q1 2026. This might be so. Even though we said this is, one, it's a one-time thing, so it's temporary. Two, when we look at it in the grand scheme of things, clearly cash flows and earnings still made out really well, right? So then we say, you know what? Maybe, just maybe, um, sorry about that. I was trying to get this thing over here. So maybe, just maybe, this is a part of what led to some early, opportunities this year, or kind of held the stock down a little bit while they work through that. Um, so, like they said, it's a one-time thing and ain't gonna last forever. The analyst summary: Airbnb has successfully transitioned into a highly cash generative business while the balance sheet is strong and management is actively returning capital to shareholders. The long term investment thesis is now tethered to the company's ability to navigate an increasingly fragmented and hostile regulatory landscape. Investors should monitor the impact of tax provision, volatility, and the efficacy of the ongoing $6 billion repurchase program as key indicators of management's ability to deliver per share value. So what we have here, let's think about what we know now, right? What we have here is a business that's definitely improved a lot over the past year. 6 billion in buybacks, raising full year guidance, ranking higher in the app stores, partnerships with promotion with hotels, partnerships with airlines, Reserve Now, Pay Later is expanding, partnerships with Instacart. Right? It seems to me, from everything that I can see here, that management has a good handle on what's going to work well in terms of partnerships and growth initiatives. Would anybody disagree with that? Would anybody disagree with that? All right. So right now I see Airbnb is a $79 billion company. So they've not hit mega cap status yet. All right. So this leaves them with some pretty decent room still left to the upside. A lot of meat still left on the bones if you're talking, 10 to 20 years down the line. All right. Will Airbnb and so now it's time for you to think like a value investor. That's what it's time now. Now it's time for you to think like a value investor. With everything that you know, will Airbnb be worth more? So you have to ask yourself a few questions first. So it's not just one question. So we're going to start with the first question here. Will Airbnb be worth more or less 5 years from now, 10 years from now, 20 years from now? What are your answers to that question? $70 billion. $80 billion. That's what they're worth right now. Faith says more. My question to you, Faith, is
I say more.
Shay says more. Anybody else?
Yeah, I would say more as well.
Okay. I'm also going to go with more. Now comes the really big question here. Let's go with the really big question. Is there enough of a margin of safety today for you to look 20 years in the future from now? That's the question. Would you say yes? Would you say no? Faith says yes.
I will load up the truck at 110.
Okay, loading up the truck at 110. Y'all heard it here first. Y'all heard it here first. She grabbing the purse. Sorry, I had to do it, Anisha. My bad. That's the last rhyme of the night, y'all. That's the last rhyme of the night, y'all. I promise y'all that.
Don't put the purse on me. I'm just let me just
Okay. Okay, we see you. We see you. We see you. Um, anyone else? Okay. How about do you have enough margin of safety for 5 years from now? Then I see we didn't get a lot of answers for 20 years. Do you feel like you have enough margin of safety for the next 5 years? If that's the case. For the record, That was a trick question. Because here's the reality, right? Believe it or not, it's easier to determine if you have a margin of safety for 10 to 20 years down the line than 5 years down the line. All right. I'll explain to you why. Y'all ready? Y'all ready to know? Y'all ready to know how this works? Here's how this works. Nobody, and I mean nobody. What's up, Tamika? What's up, John? What's going on, guys? Nobody. Oh, what's up, Moji? There go Moji right there. Nobody, and I mean nobody, has ever lost money holding the stock market for 20 years. I said the stock market, not Airbnb, the stock market. Okay? Nobody has ever held the stock market for 20 years and came out negative. That's a statistical fact. Okay? So it's easier if I'm buying something that's quality today, and I believe it will still remain quality for a long period of time. It's easier to determine that my margin of safety is good enough for 20 years down the line, where I know the stock market itself will likely not experience a negative return. Okay? Got with me on that? I need to know y'all here now. Does that make sense to y'all? Let me know. Let me take a pause real quick.
Yes.
All right, because what did we say earlier today? 75% of stocks tend to travel in the direction of the market. So if you own a quality company over the long run, it wouldn't be hard to believe that they would be one of those quality names that are traveling along with the market. If the market's still up over 20 years, then it's not hard to believe that Airbnb will also be up over that 20-year period. Right? What your return's going to be over that 20-year period, we don't know, but it's pretty decent chance you get a positive result. Now, so as you come closer in time, you have a greater idea of what things are worth, but you have less of an idea of whether or not it will work out. Does that make sense to you guys? I'm gonna say it again. As you come closer in time, you have more of an idea of how things will work, but less of an idea of if it will work out. So yes, I know I have a discount right now on Airbnb, right? However, um, the reality is that I don't know if the stock market's going to go into a bear market in 2 years, and Airbnb will be below 130, maybe giving Anisha her 110 by that time. All right, and then how long does it take to recover? All right. So what does my return look like over 5 years? It's up for the debate, but you know, but I can still say my the price I'm buying, I can tell how good that price is for now in the short run. All right. But in the long run, that's the only way I can tell what that positive outcome is going to look like, because I'm going to get deeper and deeper and deeper into gains over that time period. All right. Of course, any company can go bankrupt, any company can go bust. So that's why I said the entire market is what's positive over that 20-year period. Nobody has ever lost money that way. But you know, and overall, a single stock is totally different. So, my thoughts on Airbnb. Um, and the reason I brought that particular part of the statement up, because as a value investor, you have to think about that 5, 10, 20-year horizon, right? And then you have to ask yourself, how certain am I about the short-term horizon? I'm not that certain about the short-term horizon on Airbnb. Stop me if you disagree with that. But I'm more certain about the 10 to 20-year horizon on Airbnb. bought at this price today, I'd be expecting to hold Airbnb for a very long time. So I need to be certain that they will maintain their, um, maintain their financial strength. And do I believe that they will do that over any type of uh, economic environment? That's going to become the question. The margins can take a shock. Again, these are things we've learned. The margins are pretty decent. There's an 85% gross margin for Airbnb. All right. Okay. Moji, did you have a question?
Yes, good evening. I was wondering how to separate the eventual possible future market downturn in the near short term. And because, there's some things like companies just can't plan for things outside of their control. Right now, they're like a good company, valuation number, all. But there are unknown things within the wider economy that they can't plan for. So how would I, as an investor, go about initiating a buy? Would it be, like Anisha said, like if it was at 110, she'd love the truck, right? But we don't know when that 110 is coming. So how do you plan for the amount that's at today versus the loan of your truck versus wider economic downturn?
Well, first things first, companies can absolutely prepare for the unknown. They do it all the time and every day. And that's why these companies last so long, the best of them at least. Um, you know, the number one thing that prepares you for the long term is what, Moji? What is it?
Margin of safety,
No, not you, the company.
free cash flow.
Cash. Look at you. You know what's up. Okay. All right. So, um, if you look at the companies that survive the longest, right, and the ones who sustain themselves very well in economic downturns, they're the ones that got all the cash. Okay. So pay close attention to the amount of cash your company has and the amount of cash that they're producing. Why do you think you look at our system, right? Cash is involved in 1, 2, 3, 4 out of 9 metrics here. And then let's be clear about this. 1, 2 of those metrics actually lead to cash. So 6 out of 9 of our score involves free cash flow or leads to free cash flow. And eventually that leads to cash on the balance sheet. Yeah. Now, as far as the buying situation is concerned, you know, um, you know, and sometimes you gotta take advantage of these smaller opportunities um for single names, right? And you know, recently the market just dropped about 7% just now. That was a 7% drop. Okay. Let me verify that actually. On the cues here real quick. All right. I think it was about 7%. I think it might have been like 6%. Let me see. Let me double check that. Maybe my numbers are wrong. We'll see. Right. And D'Amica, I want you to pay attention to this as well. since you're still trying to get get your feet wet. So it's more like 6%. It's about a 6% drop, right? So, and these are things you learn over time. This goes both for Moji and D'Amica right now, right? These are things you learn over time. A 10% drop in the market is considered a correction, right? A 20% drop in the market is considered a bear market. Now, anywhere between that 6 to 10% is not going to be a major opportunity to just buy freely whatever you want. I repeat, let me say that again. Anywhere between that well, let's say 5 to 10% is not going to be a tremendous opportunity to just buy whatever you want, right? But in a market that's still very strong, it can become an opportunity to buy that one name, right? At times, just to get yourself in the mix sometimes. You understand what I'm saying, Moji?
Could you repeat that last part?
I said, oftentimes, right, even though this is not a major buying opportunity to just buy away and just buy everything you're looking for, oftentimes these can become opportunities to buy that one name, that single name that gets you started. Okay? So,
does she know like when the VIX is over 30 and the SPY is over? So oh yeah,
well, we gotta.
it's trying to get at her, right?
Well, not yet, because I'm kind of trying to take it slowly but surely, right? Because I know D'Amica's not there yet, so she has to start with just at least identifying first these smaller drops in the market. Like I said, 5 to 10%. When the VIX breaks 30, that's going to be your a lot of times going to be your bear market, right? And those are going to be different opportunities there. Now, Moji, you already have a portfolio, right? But the same thing applies. It applies for everybody. Okay? But is it systematic in your case because you already have a portfolio? That's going to be the question for you. Is it systematic? When I say is it systematic, what I'm saying is, you know, um, is this a part of your system that's getting rid of something and adding something in? Or is it a part of your system that's saying, well, I'm still trying to build out here a list of quality names, and I'm looking for opportunities in moments like what we just saw. Right? Which one is it going to be? That's going to be the question. Do you understand?
Preferably one in, one out, especially if it's like the hope is if, let's say it's in industrials.
Mm-hmm.
If there's an industrial, I currently have a 3 that by the end of the quarter is not looking good, then replace.
Mm-hmm.
I don't want to hold a lot of unless I have like strong convictions.
Mm-hmm. Okay. So the reality is then, if that's the case, you already said it. Then that's the end of the quarter thing, right? Because I know, I don't know how many stocks you plan on having over the long run, but I know you're not. Well, no, I don't know. No, actually, I don't know. 'Cause I feel like you were one of the ones that surprised me with how many stocks you had recently. How many stocks you got?
22 to 20.
Okay. So what number are you going for?
Many that I think are good performers. 35.
Okay. Mm.
I don't have to be good for that.
Okay.
But like,
So let's put it at 35 for now. So why is your preference that one has to go in and one has to come out? at this stage.
Green.
Ah, okay, okay. So basically, you're saying your preference right now is that one comes out because you already have some that you want out.
If there's a green, something always that. As far as the portfolio. But if I have like again like two industrials or two things that we're doing it, or maybe a communication or an Adobe, and there's a strong by exceptional. Or maybe not.
No, I'm laughing. You know, Faith is hilarious. Faith said, "What if they give you towels?"
Like
I didn't catch it until like she put the comment in the chat. She been having folding towel gifs up the whole time. The whole time he was talking, she had folding towel gifs up. I'm just realizing that now. It's just hitting me. Okay.
like
Yeah, I need them plush towels though. You know what I'm saying? Them ones that's so plush they don't even absorb water. They just they just feel good. You like
saying that first lifestyle. Like
hey, listen, the air will dry you eventually. You'll be all right. You know what I'm saying? You'd be like, how does a towel get so good it dries nothing? Explain that to me. You know what I mean? You ever notice that the better the towel gets, the less it dries you?
right.
Like, okay, this is a great towel. It's amazing. But, you know, I can get a towel for like $5 that dry better than this. But you know, I'm just saying, ain't nobody trying to feel a Brillo pad fresh out the shower. You know what I'm saying? I'm just saying, just saying,
Yes. Yes.
respect. All right, now, okay. So that was Airbnb. I think we got time for at least one more. All right, I was gonna go for three, but looks like two is what it's gonna be here. So we usually in my portfolio mastery program and my division 1 program, we usually take a vote. Okay, how many of you guys um like what you heard from Airbnb and would be a willing buyer? I ain't even asked the question yet. Anisha already giving thumbs up. Look at y'all. Okay, cool. Okay, y'all are buyers. Okay. We know Anisha's buying at 110. All right, Faith is a buyer. You notice Faith Moji ain't said nothing yet. I'm just pointing that out.
And I didn't need to say something. Look,
It's a question for everybody.
their addition. Well, I wanted to just so it's in my portfolio, so I have like visual sight on it, and then
Mm, 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 mm.
no, should I not do that?
No, 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 not you, not you. Just
Gotcha.
I'm just
People, gotcha.
yeah, I'm just look
She
at this.
judging. She was judging.
I think that's the Meek. Is that who I think that is? Is that what was her name on that show? Not Peaches. I can't remember what her name was. What's her name now? Charlie Murphy is the best. All right. Um. So we got a few people that say that Airbnb is good for them. Who do y'all want me to look at next off of that list from earlier? Pick wisely. DSX? They weren't even on the list.
Yes.
They weren't even on the list.
Yes, they were. Oh, you mean like not from earlier today, like earlier tonight?
Earlier today.
That was on the list. That was one of the times.
DSX?
Boy, stop.
Oh, BSX. Oh no, they got eliminated. They got eliminated
Eliminated.
because they were not as good as the other ones.
But let me see. Yeah.
Pretty simple.
Yeah. Listen, the update, um,
So Mosey, wait a minute. No, hold on. No. So you came up and said, "Can I repeat that list again?" I said to you, "I'm gonna put it back on the screen. You snapshot it." So BSX though.
well, that's fine.
You don't put that dang list and look at the list. Just calling stocks from memory. I said which stocks off the list. Only the ones in green, man. Only the ones in green. Just so we're clear about that part, because and only ranks 1 through 6.
Everybody else can put something. Like,
MSM. Okay, I like it. I like that option. Let's do it. Okay, so we're gonna go with the exact prompts that we just written out. See? So hold on, where we at? My bad. Okay. So she's gonna change this to MSM, right? You're gonna punch this into your quarter app. Okay? If you punch this into your quarter app, you start typing it in. All right. So you're gonna close out that last one that you had there. You're gonna hit a new prompt. You're gonna hit at MSM. Okay. Boom. All right. And then we're gonna copy that prompt from there. So gonna say, give me a summary of at least also of the latest earnings call, so on and so forth. Okay. So while that's running, we're gonna go over the stock analysis. It's all about process, guys. It's all about process. Okay? Everything consistent. So basically, these are all stocks we already approved of. This already stocks we already analyzed, scanned against other companies, and realized that these were the best of the best. So now we can look at this and say, let's see here. So to the profile, go to the filings. See, it's the latest quarterly report. You're going to download the quarterly report. All right, boom. Hold on 1 second here. I had to delete those other ones from Airbnb just to make sure. Then we're going to download the 2 previous annual reports since 2025 right there. Download. And then 2024 annual report right there. Download. Okay. Now we're going to upload these into Gemini. All right, let's upload. Boom. We upload them into Gemini. Then we grab the other prompt that we put together here, right? Take on the role of a stock analyst from a major institution. Your job is to deliver Your job is to deliver a report on what is currently happening with. I'm going to change this to, all right, MSM. What has the shareholder experience been like over the past few years? How has the company's risk profile and financial standing shifted over this time period? And what are some red flags, opportunities, or threats that are observable in the reports? Okay. Okay. So we're going to bring this over to Gemini. Sorry, hold on. Hold on, please. Okay. Change this ticker symbol to MSM and let that fly. All right. In the meantime, let's slide on over here. So this is what MSM looked like today. Right. It was a buy with an exceptional outlook. It scored 12 out of 12 points, guys. I repeat, it scored 12 out of 12 points on the performance outlook. It scored 7 out of 9 on the investment grade. I'm sorry, 6 out of 9 on the investment grade. All right. So it needs to get its growth situation together. And that's directly related to the price we're currently paying for that growth. So this was a stock that we needed to get a better price on. So this one is definitely not a buy right now. So when I was saying earlier, like 5 to 10% drops in the market bring opportunities. Well, this isn't one of those opportunities. It didn't bring an opportunity here. Didn't help us out here, right? But it helped us out with Airbnb a little bit, and that could work. All right. Now, you can see here the F score and the price to book, check. The return on invested capital is good, but we need a better price to. We need a no. So we're good on the price for capital. We need a better earnings growth, better sales growth, and then that'll help our valuations here for the price to earnings growth. Either way, if the stock price was to come down towards $97.86, that would get us more than likely the price we're looking to pay. And on top of that, would probably fix this price to earnings growth situation here. All right. Now, it's going over here to, okay. Let's get our document here. All right. And then again, you would have just, boom, MSM, you would have just changed the ticker symbol and forward it over. Let's talk about what we know about MSM. All right. So I had the Quarter app, which is for those that were not here in the beginning. If you want to download the Quarter app, that's QUARTR. Right. Download the Quarter app, and that is a really great app for you to dig into the earnings of the company with. So you pull up the company, and you kind of go to the AI chat bot, and you type in at the company, so at MSM, at Airbnb, at AAPL, and then that's going to allow you to type directly at the company and pull filings from the company, right? I mean, it really doesn't get any better than that. Because I know I can depend on those numbers and everything like that, right? Let's see. Let's see. Okay, wait a minute. So they missed on earnings. We know this now. Either they missed on earnings or they missed on. So let's see here. Price contributions. Okay. Gross margin 41%. That's better than expected. So where's the miss here? Representing yes, falling short. Okay, so they fell short of the forecast for headline growth, right? For sales. So it's 2.9% growth. Oh, so that was their own outlook. Hold on. Sorry, they missed their own outlook. So they said they were going to grow somewhere around 4.5% was the average consensus from the company. They grew 2.9. That's never good. The risk was attributed. I'm sorry. The miss was attributed to the final structural phase of the Salesforce optimization, which caused more disruption than anticipated, particularly due to the higher than expected sales rep attrition and weather events that delayed customer coverage. Okay. Okay. From Stevens, we have Mall, who directly challenged management on the Salesforce changes, asking whether December was truly the last round of significant headcount actions and probing management's confidence that the distribution would fade as quickly as implied. He noted the progression of this nature tend to not be linear. McIsaac responded by affirming the changes were 100% necessary and described a rebuilt sales culture, new tools, a hunting compensation structure, and new growth forums. She acknowledged ongoing attrition by expressed confidence that we're building an engine that will deliver sustainable organic growth for the long term. Mall followed up asking whether end market dynamics had improved or stayed the same, to which McIsaac pointed to recovery in the fabricated metals and primary metals, and early signs of life in automotive and AG within national accounts. If you guys notice, I'm not writing a lot of things down right now. That's usually not a good sign for me. Let me just point that out right now. So usually as I'm reading about a company, you know, them fingers is typing, right? Well, not much here to write home to mom about. Okay? This is not looking good for them right now, as of right now. All right. Now we're talking demand risk from KeyBank. Newman followed up on pricing and asked whether customer conversations had indicated any negative impact from macro uncertainty and whether demand could be getting pushed out to the right. All right, McIsaac said the company had not seen demand slowing. Rather, customers were focused on securing supply in anticipation of increasing demand. Okay, that's a positive. Um, so their customers see increasing demand, had us increase in demand for them. JP Morgan asked, or probe the broader head count picture, noting total heads were down 240 sequentially, more than the 100 expected. Okay. I'm sorry, but this is a sign that something is going on here, that they're trying to patch. So McIsaac confirmed the company's ambition is to restore MSC to mid-teens operating margins. See, all right, there you go. All right, mid-teens operating margins. Where are they at now? Let's find out. Oh, they're at 8.5 right now. So yeah, they are trying their best to lower head count and find ways to save some money, so that way they can do better on the margin. Moji, are you there? This right here. This is a perfect example of a company that wouldn't be too prepared for an economic downturn. But it's also a prime example of a company trying to prepare. It ain't working. It ain't working. They're down to 5.4 on the profit margins, and it seems like they deal in metals.
Well, sometimes you feel like is performing. Would you be able to see what other companies in their sectors are doing in terms of um like operating margin, and there's something for that?
Um, I haven't put anything together like that.
Okay.
What you can do is you can just go to the industry. All right. Let's go to FinViz. Actually, you pull them up.
Mhm.
All right. You go to industrial distribution. You go to financials, and you sort them out by operating margin. Right here.
Gotcha.
And MSM, right?
Mhm.
You see them? Where they at?
Number 9.
Number 9. Okay, there they go. So they're like middle of the pack. Like middle of the pack, essentially.
Like margin
Higher.
higher.
That suggests that their costs are. It suggests two things. It suggests that their costs are lower, and it also suggests that their cost of doing business is lower, and it suggests that they have a competitive advantage potentially. All right, the higher up on that list they are. All right, so Fastenal clearly has some sort of an operational advantage. So look at AIT. We did well with AIT in the past.
Yeah.
Right?
Yeah.
You remember them?
Yeah.
They happen to be at the top of the list. All right, double-digit operating margins. It's no wonder why they do well. Don't get me wrong. MSM is also doing pretty well, as you can see. All right, but the question is, okay, cool. Would they be doing well if it was just all about them? All right. So they work in metals and dependent on automotive sales, uh, partially. I'm just going with what I know now, right? Okay, let's go over to Gemini and see what they got for us now. But so far, I'm listen. By this time, I want y'all to know that I would have usually already walked away from this company. Just for the record, I would have usually already walked away. However, I'm doing this because I want you guys to learn the full, right? The full steps, right? All steps.
Point out the reason. I know I heard you say that you haven't wrote much down, but what was your? And maybe you said the reason I was.
Yeah, no, yeah, I said that essentially there's just too many negatives here, right? And then on top of that, they're dependent on so basically their margins are too thin. That was when I made the decision right there on the margins, right? Um, the margins are too thin. They're firing more people than necessary, and that's obviously an attempt to improve margins, and even the management said so. So what do we know? We know that
The the word you said sign for it's good and horrible. The balance. This is the first time where something is that we're trying too much.
no. They didn't say that. The analysts questioned that. They basically they told them how many people they were going to fire. They said 100 people, about 100 people. Yeah. Well, that's because it's not every day. I mean, you research as many companies as you can, but not every day you're going to bump into you know the companies that are going to give you the insight on these different little pieces. So that's why it's so important to just stay in research. Because then you bump into different things and you're like, oh yeah, that makes a lot of sense. I'll pay attention to that in the future, right? So I'm never gonna stop paying attention to these things. Look at this. They're dependent on work in metals and also dependent on the automotive sales. That was the other thing, Anisha. So once I realized the margins were that slim and they have to depend on auto sales for a pretty large portion of their revenue, yeah. If things start to shift and discretionary spending falls, they're gonna get cracked in the jaw.
So if the price falls, which would in turn help valuation pricing,
Say that again.
that would if the price of the stock would fall at 10%, even though it would help valuation, it still wouldn't help fix or not fix. It still wouldn't be a solution for the financial situation.
It would actually make it worse
Mhm.
because the value of the company determines the essentially what they get as far as like um favorable borrowing costs and things of that nature.
Got it.
So as the company shrinks in value, their borrowing costs become less favorable.
Yeah.
That's the last thing they need. But let's keep reading. No problem, Faith. Let's keep reading here. So we got this one last piece to read through, and then we can start to close out from there, right? So they continue to operate as a vital supplier in the industrial sector, demonstrating a disciplined approach to capital management and inventory control. This report summarizes the company's recent performance, risk profile, and the evolution of its financial standing from its fiscal year 2024 through 2026. Let's read this again, right? They continue to operate as a vital supplier in the industrial sector, demonstrating a disciplined approach to capital management and inventory control. This report summarizes the recent performance, risk profile, so on and so forth, right? Now, shareholder experience, period of discipline. That sounds like a period of tightening the belt, but let's keep going. The shareholder experience over the past few years has been characterized by operational stability and a shift toward deleveraging. So they're trying to get rid of some debt and get rid of some headcount, right? The company has transitioned from a period of net borrowing in fiscal 2024 to a focus on debt reduction in fiscal 2025, evidenced by net payments of $21.5 million on credit facilities and private placement debt during the 2025 fiscal year. Oh my. Oh my. When you have to prioritize $21.5 million in debt, you know you're struggling at this point. That the struggle is real. And that's the thing about being in the stock market, guys. You start talking about actual big numbers like they're really little like they're really little numbers because they are. In the grand scheme of things, this company is trying everything to get those margins up and get on a different path. Which I gotta commend them for that. I have to commend them for that. But how did you get in this hole to begin with? This had to be poor management. Remember when I told you guys I can see the quality of the management in the numbers? Yeah, this is what I meant. Right? How did you get in the position where you had to like take a pause from, leveraging your operations seriously to pay off $21.5 million worth of debt? Are we serious with this right now? Let's keep going though. Maintaining inventory levels remains a central pillar of the shareholder value position. Net inventory levels were approximately $643.9 million as of, with the company utilizing rigorous valuation reserves based on sales history and on-hand quantities to manage obsolete or slow-moving stock. Their health is tied closely to industrial activity, as I said. Their health is tied closely to industrial activity. Is that not what I just said a second ago? All right. As reflected by the company's tracking of the IP index, which averaged 103.3 for the 12 months ended. Right. That's up from the prior year. All right. Macroeconomic sensitivity as an industrial distributor. This is what I was talking about here as well. There it is. Right. MSM is sensitive to fluctuations in broader industrial production. The company must constantly forecast demand to prevent excess inventory or shortages, both of which impact. Guess what? Guess what it impacts, Moji? Margins. Mm, 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 mm.
So companies have a lot of issues, but have an exceptional forecast.
Yes. Which is why what did I say earlier? I said you cannot just go from this company has a great forecast to I'm buying it now.
Gotcha. Yeah.
Right? You want to go straight into let me find out as much as I can about these guys before I buy them. I don't want to get caught off guard. What did I say to you guys earlier in the night? It's easy to tell the value of a company in the short run. It's harder to tell how the actual performance is going to play out. Over the long run, that's easier to tell, right? So when you have a company like this, and this is not good for the short run, I would need this company. You're talking about a slight discount emoji. I would need this company to be stomped into the mud before I buy them.
Okay.
Okay, that
It's a lot.
yeah, that's it. Like this has to, and I probably still wouldn't buy them. I'd probably just trade them back to the upside for the value, and just get rid of them and get rid of them ASAP.
But I'm never going to lot.
Yeah, yeah, just too much going on right now. Deleveraging trend, right? Red flags: investors monitor the effectiveness of inventory valuation reserves and ensure that any changes in the IP index are met with proactive adjustments to supply. And I haven't got time to be checking all this. When do I have time to be checking the like what am I investing in one company? And this is all I have to look at with my life? No. So you also don't want to get caught up in companies where they have so many issues that it makes you want to check the tiniest things to make sure they're doing okay. I would have to, are you okay? You know? That's what I would have to ask. Are you okay? There are too many companies out there to want to be involved in this. I will not be checking the IP index. I should not have to check the IP index. Now, don't get me wrong. As Cecily would tell you, we do check the industrial production index. But that's besides the point. I check it because it's a report that comes out on a monthly basis that I can go and look at, and that's for my leisurely knowledge on the current economic environment. Not because I want to figure out how good or not good that is for this one single company in my portfolio. We don't micromanage. As a value investor, the number one thing is that when you buy that company, you want to know for certain that it is quality and everything you know about it supports that idea that they're quality. So what we have here is a company that appears to be quality, but everything we're looking at doesn't support that idea that they're quality. Hence, what I would do is walk away. That's what I would do with this one. You can do what you please. I don't tell people what to do. I give them information. All right? And some might argue I give them some of the best information to make decisions with. All right? So you've been given a lot of information on this company. And this is their product base right here. So it's a nice, boring company. You like boring companies, but it's just not working out. Hey, I mean, look. I mean, how many of you guys just buy a drill bit from the discount store in your neighborhood? Same goes for your sandpaper and all this other stuff. It's like DIY is slowly changing. Anyways, so the company's been doing pretty well coming out of its base in 2026, but I just don't know how long that's going to last. And again, I'm not here to try to guess either, right? So it looks like in a pretty decent uptrend here. You gotta like that, But I'm positive that there are some other companies out there that I can get just as good of a return from and not have to be so concerned about where we go from here. All right. Any questions, guys? I'll stick around for a little while. We'll close out around maybe like 10:15-ish. Any questions? All right. Tonight, let's recap here. It's really all about this. Once you figure out the list of companies that you're interested in, your next job, right? So your first job is to figure out is the company quality and is it trading at a margin of safety? Your next job is to find out as much as you can about the company. Right? And just layers of information. Is it mainly positive information? Is it mainly negative information? Are the positives outweighing the negatives? Are the negatives outweighing the positives? So on and so forth. Notice, as I learned more, I gained clarity. I did not go into confusion. I repeat, notice, as I learned more, I gained clarity. I did not go into confusion. I'm going to be honest with you. That a large part of that is because I have experience. I'm just going to be honest about that. Okay. However, what you need to do is practice taking notes. Practice researching companies and taking notes, writing down just like you saw me do here. All right. All right. Just typing up or writing up bullet points as you learn new things about the company. Just put them in bullet points. And the reason bullet points are so great is because what happens over time is you start to realize what's worth putting in a bullet point or not. Every bullet point seems as if it's somehow too important to waste on small things, right? Bullet points almost force you to focus on the big picture instead of just typing things up and writing things up, just bullet points. All right. Questions? Anybody have them? Let me know. On a scale of 1 to 10, um, how well did tonight, you know, push you forward in your understanding of you know, how to learn more about companies as a value investor? On a scale of 1 to 10, where you ranking tonight? And who learned something tonight? All right, gotcha. You just put your votes in the chat, guys. I don't know. Sometimes I feel like y'all be waiting for these guys on the stage to say something. But when I ask questions like that, I'm asking everybody in the room. If you're in the audience, you just put your answers in the chat there. All right. We're 9.5. Okay, I see you. I see you. Dish 9.5. Okay. A 10 from Anisha, a 10 from Shay, a 9 from Moji. Okay, we take it. Jay Crispy with the 10. Okay, that's what's up. Okay. Well, I'm happy you guys were able to pick up on some things tonight. I am looking forward to picking things up. I understand that one of the things that we discussed was basically giving you guys some time to soak this stuff in. Okay. So this week, we're gonna do Monday, Wednesday, and Friday, and then Tuesday and Thursday are going to be left for you to reflect on the information and think of maybe some questions that you want to have. Think of some questions that you might want to, like ask me maybe tomorrow, right? Um, okay, Wanda, okay, definitely much appreciated. Um, I am Wanda working on the second edition of that book, and the second edition is going to be even more, just like all encompassing, than the first edition, which I know is a tough task, but you know, and I boiled down the vocabulary a little bit more as well, so that's going to be really dope there. And I took a writing course, so my writing, in my opinion, has improved. It has improved. So I'm excited about that as well. Um, And I did a little, little writing course and a couple workshops. I'm feeling good about it. So, anyways, y'all, I guess we will link up tomorrow morning. Today was a good day for trading. You know what was crazy, yo? Here's what was crazy, y'all. Here's what was crazy. Um, right around like that, not that last half hour of the market, but in that hour that led up to 3:30, we hit my stop loss on the penny, but of course it has to go one penny below your stop loss to trigger your stop loss. We hit it on the penny on T triple Q and then bounce from there. Right. And then in the aftermarket, we hit exactly on the penny the stop loss that we had from today. But again, that was a one penny below as well. So Bank of America opens down tomorrow morning. It's more likely that I'm going to be exiting that particular position. But CVS is making up for everything. So we get a win on CVS. We get a win on the Nasdaq. Bank of America, potentially, I'm going to take a loss on that one if it opens lower in the morning. If it opens higher, then I'm still good in Bank of America, and we'll see if we can get a win out of that as well. We have won 8 out of our past 11 trades, and the Pro Pivot Indicator has delivered 6 out of 7 of the past signals that we got from there. All right, so they're looking really good. Looking really good. I'm gonna keep the notes going, and I'll let you guys know how it all turns out when we hit 100 trades. My fingers are already aching from the tallies. I'm joking. But anyways, I'll catch up with you guys in the morning then. All right. Everybody be blessed. Stay well. I'll talk to you soon. Later.